Hello traders, I want to welcome you all to Quantsapp. My name is Diljit and today we're going to talk about how you can identify the market trends or the market direction at the opening time, right? So before we jump on to the video, if you haven't signed up Quantsapp as of yet, you can sign up to Quantsapp now, and as you'll unlock 20 plus free tools from Quantsapp, and that can help you in your options trading journey. So if you want to know what is Quantsapp or what kind of a tools Quantsapps are providing, so you can go on the learn section, and in the video library you can check out the multiple videos. So there are multiple tools and multiple strategies on which how you can trade in options and how you can increase your strike rate or profitability. So if you want to know more about Quantsapp or if you have any doubts or queries, you can come here at the support section, and just a second, you can come here at the support section and you can mail us or write us, and we'll try to help you out with your doubts and queries, right? So let's jump on to the video and understand that how you can identify the market trends. So stay till end and we'll cover up multiple points, right? So firstly, I'll go to the blackboard and let's just start. So initially, before market, there should be an analysis done. So pre-market analysis will do. Okay, so initially you need to do the pre-market analysis. So pre-market analysis. So in the pre-market analysis, there are few points which you need to keep in mind. So firstly, what you will check out is, firstly you'll check out the global market. Okay, so global market gives us a good view that basically in which direction the market is opening. See, generally most of the time the markets generally tend to correlate. Okay, so somewhere if you are seeing a tension of a heavy selling tension in the markets, in global markets, generally you will see the similar facts in the Indian market too. So whenever you're creating a view, if the global markets are showing you a bullishness or bearishness, that will help you indicate that where you can find out our Indian market also how it is gonna relate to it, so that you can basically identify with the help of the global market analysis. Okay, now the next point what you need to keep an eye is, let's just suppose you have analyzed a stock, or you have some stock or index in mind. Okay, so you need to check out the particular stock or index. Okay, so you need to pre-analyze if there is some kind of a significant level or some kind of a basically important level resistance or a support is broken, or some kind of a volume we are seeing changes in the volume. You can check out that. So any kind of a significant level or volume. So if you're seeing significant volume or level being broken, or you're seeing a volume parameter which is higher than usual, so somewhere that can indicate you that you can see a momentum in this given particular stock. Okay, now your next step is basically you need to identify that which kind of a direction the particular stock or the index is taking. Okay, so with that the opening range time comes. Okay, so now you can see basically the global market analysis we have done. We have checked out if there is significant volume or changes have come in a particular stock. Now the next thing what you can check out is the news. Okay, so there are some important news. Let's just say if there is a earning release. Okay, earning release, or let's just suppose if there is some kind of changes in the monetary policy. Okay, so these kind of a news will help you identify if there is a momentum coming in the market or not. So that is very important to know that what kind of a thing, what kind of a news is coming in the markets. Okay, so if there is a earning release, or if you see if there is a particularly momentum coming in any kind of a stock, generally you will indicate with the help of the news, right? So if you are having any kind of a positive news, let's just suppose that interest rates are being cut, or you are having a good positive news on a particular company if they have made a merger or something, so that is when you'll have a positive effect to the particular stock. So what you can do is this pre-analysis will help you identifying the stock earlier on, so that during the market hours you just pay attention to the quotes, right? Now your next step is to basically identify that, now let's just suppose you have analyzed the pre-market time is done. Now the next part comes in the opening range. Okay, so the first 15 to 30 minutes is very crucial time in the market. So that is the time generally you need to identify that which kind of a direction it is taking. So most of the times you'll observe that, let's just suppose the stock or index is giving a good range breakout, opening range breakout on the upside, it generally tends to end up on the upside only. Or similarly, if it breaks down and goes on the downward direction, generally till the rest of the day we'll see the particular market is on the downside, right? So that will help you create a view. So next point comes the opening range. Just a second. Okay, so opening range. So this opening range, as I said, it can be for first 15 minutes to 30 minutes. Okay, so first 30 minutes to, so these first 30 minutes are very crucial time. Okay, you need to identify that, let's just suppose if the particular stock is creating a range. Okay, and if the range breaks on either side, generally the market tends to take that kind of a direction. So initially, if you are analyzing any kind of a stock and if you want to initiate the trade there, so what you can do is you can initially mark the range of the first 15 to 30 minutes, and then you can just wait for the particular stock to react. Okay, if it breaks out on the upper side, generally you can go on the bullish side, and generally if it breaks on the downside, you can go on the bearish side. Okay, creating a view, because generally if it breaks out in the morning, generally we'll see it closes somewhere on the upside most of the times. So this can help you create a basically this range will help you identify that which kind of a direction you can see in the particular index or the stock itself. So now guys, now we have covered up the 2 points. Okay, so firstly we have covered up the pre-market analysis. Now we have done the opening range. So now the next step comes with the volume confirmation. Okay, so what is volume confirmation? Basically what you need to know is that, let's just suppose, okay, volume confirmation. Okay, so volume, why do we need volume confirmation? Is because generally whenever you're seeing a the price momentum, as I said, if there is a range breakout on the upside or a range breakout on the downside, if there are high volumes at this time, okay, so if there is a high volume supporting this particular momentum, that will help you identify that the trend or the market trend, the particular direction is a strong direction. Okay, so with the volume we get to confirm that the particular direction which we are trying to decode, is it a strong trend or a weak trend. So basically now if you are seeing a high volume at this particular momentum, okay, so this time basically you can initiate a trade because somewhere you are seeing a good kind of a momentum. Just a second. And again, when we talk about low volume, okay, so again when you are seeing a low volume, basically the trend which you are seeing is not a perfect trend. Why so? Because somewhere there is an indecision we are seeing. Okay, so the particular, whenever the volume is low, that means somewhere the market participants are not able to decide that which kind of a direction the particular stock needs or the index it needs, right? So you need to identify if the volume are high or low at the particular point of momentum. Okay, whenever the momentum is coming from the opening range, you need to confirm it with the volumes. So if the volume is low, generally it is an signal for an indecision, or basically it is trying to indicate that somewhere the momentum what you are expecting, you won't get that kind of a momentum. And if you're seeing high volume, that means somewhere the price action is reacting to the particular direction or the trend which side we are seeing, right? So now when we have done the volume analysis, so the next step when you need to see is the gap up or a gap down. Okay, so that is a very important point. Most of the people generally tend to or they want to understand that what is happening when there is a gap up or a gap down. Okay, so gap up or down. Okay, so let's just suppose we'll just sort it into, so this is gap down and gap up. Now let's just talk about gap down first. So generally whenever you're seeing a gap down with high volumes, okay, so whenever you're seeing gap down, okay, with high volume, so what does this indicate? That the selling pressure is heavy, okay. So you're seeing heavy selling happening in the particular stock or the index. So whenever you're seeing there is a gap down, that is indicating you that somewhere the particular stock or the index is indicating you that there is a selling heavy tension happening in the particular stock. Okay, now again when we talk about gap up, okay, so let's just suppose there's a gap up with high volume, okay. So when you are seeing a gap up with high volume, basically it is indicating you that somewhere the particularly we are seeing the price is being inflated, okay. So we are seeing good buying happening here, okay, and with the gap up it is indicating you that the price which it closed in was not the ideal or a fair price which the market was expecting or the market participants were expecting. That is why they need a gap up. So basically let's just suppose the particular market closed here and on the morning it is opening here, okay. So somewhere it is indicating you that this is the this particular gap in the center, okay, is just a gap which was basically, let's just say it can be the long unwinding. So in the previous day, let's just suppose the people who traded and took the particular price upside, when they were booking their profit, so that is the time somewhere we see the price being reduced. So this is the point generally where you'll see the long unwinding. So this long unwinding is not considered as a particular price momentum or a trend. So that is why to annul this particular momentum, there is gap up in the market, okay. Or else, as I said in the pre-market, if there is any kind of news or a sentiment, that is also the time where you can see gap up and gap down. So let's just suppose if the market is having a bearish view, let's just suppose if there is a war broken out, or if there is a bearish sentiment of a stock, if there is a earning release which is showing that the company is a loss making company, so that is also the time where you'll see gap down. So we were talking about gap up. So whenever you are seeing, if there is a market is having a good sentiment, let's just suppose as I said the interest rates are being cut, and if the particular stock is having a good earning release, or if there is any kind of a sentiment which is suggesting you that we can see in a bullish market, so in that cases you will see a good gap up, and from there on you can see a momentum. So this gap up and gap down is just indicating you that the fair price which the particular market closing is not the fair price, and the fair price is the opening price where you see the gap up or the gap down, right? So guys, our next point what we need to do is, let's just check out the candlestick patterns. So after analyzing the gap up or the gap down and the opening, generally in the opening range we need to analyze the candlestick patterns, okay. So in the candlestick patterns, generally you can indicate if there is some kind of a reversal, or if there is a continuation of a trend is happening, you can identify with the help of the candlestick patterns, okay. So what kind of a candlestick patterns you'll observe and at what time? So initially, as I said, in the opening range from 15 to 30 minutes in range, so that is the time you need to identify this candlestick patterns, okay. So what kind of a candlestick pattern? Let's just suppose doji, okay. Let's just suppose bullish or bearish engulfing, okay. Let's just suppose morning star or evening star. Or let's just suppose double top or double bottom, okay. So generally, these kind of a candlestick patterns, when you'll observe, okay, it will help you indicate if there is a reversal pattern coming or a continuation. So firstly we'll talk about doji, okay. So generally doji indicates something like this. So the opening and closing is very close to each other, and you'll see big wicks on both of the side. So somewhere we can see that particular price had to go both of the side, but somewhere it is still indecisive and it's in the center. So generally, in technically, if the doji, if there is a doji form, that means somewhere there is an indecision happening. So next candle to doji, if it breaks the high of the doji and the closing is on the above, so generally the market tends to go on the upside. Similarly, if the particular price is the next candle is closing below the doji, that means somewhere it is indicating the price might go down. So this is the indication you can take from doji. Now bullish and bearish engulfing. Okay, so generally you'll see it at the extremes. Okay, so if at a support level you'll see bullish engulfing, or at the resistance level you can see a bearish engulfing. Okay, so what is bullish engulfing or bearish engulfing? Generally what you'll see is, in the bullish engulfing you'll see a small red candle, okay, and a bigger green candle on the next one. So somewhere it is engulfing it completely and still going above it. So whenever you are seeing such kind of a pattern, that is indicating your bullishness. Similarly, again, if you want to go for a bearish engulfing, in the bearish engulfing you'll see a smaller green candle at the resistance. Okay, just a second. So you'll see a smaller candle, green candle at the resistance, and a bigger red candle. So that is an engulfing again, but on the bearish side. So now the next pattern is the morning star or the evening star. Again, you'll find it at the extremes. Okay, so at the support level you'll see morning star. So morning star is indicating you that, let's just suppose there is a red candle coming, a red candle at a support, and a green candle suggesting you the otherwise. So one red candle and two green candles you will see, and it is indicating you that somewhere the market has taken the support this way. Okay, similarly at the resistance level what you can see is that one green candle is coming at the resistance, and then you are seeing a red candle and then again a red candle. So this is indicating you that there is a bearish momentum coming from now, and this is particularly the resistance, right? So this is the pattern in the morning star, evening star. Generally you can tend to decode the direction with the help of this. And the lastly, when we talk about double top or double bottom, okay, so we have talked about it earlier in the earlier videos also. So double top pattern, basically it's suggesting you that it touches a particular level 2 times and then it returns downwards. So that is a bearish indication. So if you are having a double top created anywhere, that means somewhere it is acting as a resistance. Similarly, double bottom, when we are talking about, so it is seen as a support because you are seeing 2 touches at the lower level, and from there generally we tend to see the market to be reversing on the upper side. So these are the candlestick patterns which you can observe during the opening range, and you can tend to identify that which kind of a direction the particular stock or the index is taking. So now the next point when you need to understand is that basically you need to know which sector is performing. Okay, so you can come into Quantsapp here, okay, and basically you can come in the built up here. Okay, so you can come here at the track and you can see the built up sectors. So this way you can basically just check out the sectors of how the sector is performing, which sector is bullish, which sector is bearish. You can see there is a long built up in IT, metal and realty. That means 3 of the sectors are bullish. And if we talk about the OI, the metal sector is having the most OI. So that means the metal sector is acting very bullish at the current market conditions. And similarly, we can see many sectors in the bearish side. Okay, and when we talk about the top one, it's the others. Okay, so the other sector stocks which are in the other sector is acting as basically the most bearish today. Okay, so this way basically you can check out the sector data and you can identify which sectors are performing, which sectors are not, and depending on that you can initiate trades on the stocks which are belonging to the sectors. So if you want to initiate a bearish trade today, you can go for the others because it is indicating you the most bearish stocks today. And similarly, when we talk about the bullishness, we can see metal is performing today. Okay, so metal stocks today can be a best pick for the bullish side. So this way you can identify bullish stocks and the bearish stocks just by identifying the sectors, right? So sector analysis is also equally important than selecting the particular stock. Okay, now you need to check out the indicators also. Okay, so indicators are part of you, so it is trying to help you in the technical analysis. Okay, so indicators generally you can check out. Okay, so you can take the help of the indicators in the technical chart. Okay, so in the indicators you can use the MAs. Okay, you can use the RSI or the Bollinger. Okay, Bollinger Bands. So these are the indicators. Basically MA is the moving average. Okay, so you can use SMA, smooth moving average, or double exponential moving average, or exponential moving average. So there are multiple types of moving averages. Moving averages generally tend to give you the momentum of the particular stock. Okay, so let's just suppose if the stock is going on the upward direction, so the moving average will give you the accurate price, and generally the stock price tends to go high and it creates a low, it creates a high. So basically to avoid the volatility, you can check out the MA to get the average price or the fair price. So MA will tend to give you the fair price of the particular stock and not the volatility. So you can avoid the volatility, and you can just check out the MA and identify what is the current price of the stock. Similarly, you can use RSI and Bollinger Band. Okay, so you can use RSI as a particularly reversals. Okay, so whenever you are seeing RSI coming at the higher levels, generally you can see a trend reversal here. Again, at the lower, you will see a trend reversal here. So now lastly, we'll talk about the market bias. Okay, so don't make any kind of a bias that, let's just suppose you are seeing the market going upwards or market going downwards on the basis of sentiment. Don't create such biases. Generally, as I said, if you follow such step rules, okay, if you check out the sectors, if you check out the indicators, if you just check out that pre-market analysis, if you do such kind of a setup, okay, generally you'll avoid making the silly mistakes. Okay, and generally you'll try to find more profitability in your trades. Okay, so you can do such kind of analysis. Okay, don't create any kind of a market biases. Generally, whenever the market, if it's taking a direction, you can identify with the help of these tools, and you can use Quantsapp also to take a better edge, and you can initiate trades, right? So I hope you understood the concept. I hope you how you can identify the market trend in the morning. So guys, if you like the video, do press the like button. Thank you so much guys for joining. If you have any doubts or queries, you can drop it in the comments and we'll try to help you out. Thank you so much.